I'm Professor Akudo, and welcome to Lecture 101 on Internal Control. Internal control is a system of policies and procedures that a business implements to provide reasonable assurances that 1. The company's operations are effective and efficient, 2. The company's financial reporting is reliable, and 3. The company is complying with applicable laws and regulations. Now, let's look at the process of implementing effective internal controls through the example of Fat Donny's liquor business. Effective internal control consists of 5 interrelated components. The first component, control environment, is the environment in which the members of an organization conduct their activities and responsibilities. The control environment includes factors such as overall integrity of the workplace and ethical values of personnel. The second component, risk assessment, is used to identify and analyze risks that threaten an organization achieving its objectives. Organizational risks can arise from external and internal sources. External sources may include new competitors or even changing customer expectations, whilst internal sources may include inadequate workforce training or errors in financial reporting of activities. The third component is control activities. Control activities are the actions used to manage potential risks that prevent the organization from achieving its objectives. The various forms of control activities include establishing responsibility. This ensures responsibility is clear in an organization. Secondly, maintaining adequate documentation. This involves accounting information being entirely correct for it to be useful and reliable. Segregation of duties is the process of dispersing task responsibilities among employees. Physical security is simply the safeguarding of an organization's assets. And finally, independent verification refers to reviewing and reconciling accounting information. The fourth component is information and communication. This component refers to relevant information being communicated appropriately and flowing freely throughout an organization. The final component is monitoring. Monitoring refers to the ongoing assessment of the effectiveness of internal control. The monitoring structure could involve supervisors checking for evidence that a control activity is functioning properly during business activity. The 5 components of internal control can be thought of as a pyramid. Now, a fundamental issue of internal controls are its limitations. Firstly, the human element. This arises due to the fact that internal controls are dependent upon human judgment. And the second limitation is cost-benefit analysis. This refers to the cost of internal controls outweighing the marginal benefit. This concludes Lecture 101. And I expect the 40,000 word thesis on internal controls due next week.